everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we are looking at the fundamentals and driving the markets currently. So Peter, is the USD still gaining ground?
Yeah, actually it is. However, we have to note that the gaining as such, the differential seems to have been reduced, but overall, yes, the US dollar remains to the upside. I would dare to note that the market's attention remains on the monetary front. It was characteristic that Cleveland Fed President Mester yesterday made some comments. Practically, she stated that despite the Fed's wide rate hikes, the bank was not able to actually curb inflationary pressures, and practically implied that more rate hikes would be required for the Fed to actually achieve its goals. And more or less that tended to underscore the hawkishness of the bank once again. And I would expect actually the Fed's attentions to remain at that level for the time being.
And how about the US stock markets?
Well, US stock markets yesterday showed mixed signals for a second day in a row. And we may be seeing that the market is still trying to navigate between increased tensions and uncertainty on a geopolitical level. At the same time, we have the hawkishness of the Fed. And let's not forget that the earnings season practically has started, which also complicates the matter even further. So there are a lot of factors which are driving US stock markets now, and I think market participants are more likely trying to figure out where the whole situation is leading to. So I would expect the sideways movement to continue up until practically at some point, most probably US stock markets will find the direction of their next leg.
And back in the FX market, I understand that there was wide volatility for the pound yesterday.
Yeah, it was a roller coaster for the pound yesterday. And we have to note that despite actually UK employment data for August being better than expected, we had an unemployment rate which ticked down. We had the employment change figure which dropped into the negatives, yet not as wide as we had expected. The market bypassed the release in total. There was very little volatility upon release. We are talking about GBP USD rising about 30 pips upon the release. I think that the market's attention is towards the monetary policy and especially BOE stance. Now, it was characteristic that on Monday, BOE announced that it will be keeping a bond buying program of around £5 billion worth of bonds per day. It was characteristic also that BOE Governor Bailey yesterday stated that the bank has no interest in actually extending the program beyond Friday. Yet, during late American or today's session, we had a release from the Financial Times, a report which stated that BOE signaled in private to bankers that it could be extending the program. And that turned the credibility of the bank into shambles. I would dare to say that despite today's BOE announcement that there will be a stop to the bond buying program by Friday, I'm not sure that the market actually believes the bank anymore. We will have to wait, ride it out up until Friday and see on Monday what happens. Other than that, I would be highlighting also that we had the release today of the GDP rate on a month-to-month basis. It dropped into the negatives. I think it was at minus 0.3% month-to-month. Yeah, and I would also be highlighting though that we had a wide drop of the industrial output growth rate and the manufacturing output growth rate. It was characteristic that the manufacturing output growth rate dropped to minus 1.6% month on month, which is quite impressive, and we're worrying about the UK economy right now.
And how about the JPY?
JPY against the US dollar weakened further. Practically, the price action of USD JPY has placed some distance between itself and the 145 yens per dollar support line. Practically, the market is now risking the possibility of another intervention by Japan. Why? Because at this level, we have seen Japan actually intervening in the market, supporting the yen. That was 2 weeks ago, and more or less that's a scenario which Japan's finance minister Suzuki has warned about, that the Japanese may once again intervene in the market, or at least they're standing ready to, and defend the yen. So we may see volatility for the yen once again. At the same time, I would be noting that USD JPY may have reached overbought levels and may be ripe for a correction lower. Other than that, on the fundamentals of JPY, it was interesting to see that Prime Minister Kishida is still backing BOJ Governor Kuroda on his ultra-loose monetary policy. He refused to cut short the term of BOJ Governor Kuroda, and practically that would imply that the Japanese government allows the ultra-loose monetary policy to continue.
And what's on the calendar for today?
Well, we have a number of speakers today, and I would be highlighting from Bank of England Hugh Pill, as well as MPC member Catherine Mann. I would also be highlighting ECB President Lagarde, and we have also ECB's Lane speaking. While from the US, we are getting practically Minneapolis Fed President Neil Kashkari and Fed Vice Chair Barr. All of them could create additional volatility for the markets. At the same time, as for financial releases, we already mentioned the UK data. Right about now, we're getting Eurozone's industrial production growth rate. And I would be highlighting in the American session the release of the US PPI rate. Now, we are getting some mixed forecasts here, while we are having, at the same time, on a year-on-year level, the rate decelerating, while on the month-on-month rate, it's accelerating. So it's going to be a question how the US dollar will be reacting on that. In tomorrow's Asian session, I would be noting the release of Japan's corporate goods prices. And should there be an acceleration, that would imply practically that inflationary pressures within the Japanese economy are intensifying.
Any final comments?
Well, it's a big question on, once again, the pound and how it will be reacting over the coming days. But I would be highlighting once again the US stock markets at the American Open. I would like to see how the US stock markets will be opening, whether there will be further bearish tendencies intensifying, which may more or less imply that the cautiousness in the market is still strong.
Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
Hello everyone, my name is Peter Iosif, Senior Market Analyst here at IronFX. Together we'll be going through the technical part of the presentation. In front of your screens you have US dollar indexes daily chart. I would be noting the slight green candlestick yesterday. Note that there was some volatility. However, let's drill down to the 4-hour chart. By the way, the 4-hour chart is the default mode of the time frame from the charts we're going to be showing unless otherwise stated. It's interesting to note that the US dollar index yesterday dropped, bounced on the 112.50 excuse me, 112.50 support line, and then regained its losses and seems to be stabilizing. So practically, the suspicion of a possible sideways movement should the upward trend line initiated since the, let's have a look, since the 5th of October, this one, has been broken. And hence, we tend to maintain our bias for sideways motion between the 113.70 and the 112.50. On the other hand, I would be noting that we have an RSI indicator which is currently at the reading of 60, could be implying some bullish tendencies here. Also note that the 200 moving average, the 100 moving average, and the 20 moving average all have upward slopes, while at the same time the lower and upper Bollinger Band seem to also have an upward slope. So there may be still some bullish tendencies left here for the greenback. Should we see the bulls taking over and guiding the US dollar higher, we may see the price action rising, breaking the 113.70, which, mind you, provided substantial resistance here, forcing practically to a downward movement of the price action. And the next possible stop could be the 114.70. Note the resistance provided here. That was around the 28th of September. It's actually the highest point, if I'm correct, in the chart right now. Let's drill out to the monthly chart. Definitely. Okay, back to the 4-hour chart. A bearish scenario which does not seem to be in the cards, but it's still a possibility and should be covered. The first possible stop would be, let's readjust the chart, the 112.50, and we would require clear breaking of the S1 for a bearish outlook, and in which case the next possible stop could be the 111.65, a level which provided resistance at this point, which was the 5th of October, while also provided support here. That was the 30th of September and was aimed for on the 22nd of September. So it seems to be a pretty valid level. Other than that, once again, we expect the bias for a sideways motion to be maintained, and I would be noting the possibility of some bullish tendencies for the US dollar index. Let's have a look at Euro USD. Once again, in the 4-hour chart. Here we are. Euro USD, which also seems to have stabilized between the 0.9735, despite the break above it yesterday, and the 0.9635. We tend to maintain our bias for sideways movement, given that the price action has once again dropped below the 0.9735 resistance line and seems to have maintained a sideways motion. At the same time, we note that the 20 moving average is still moving lower. At the same time, the RSI indicator below the 4-hour chart, it's at 42. Once again, some slight bearish tendencies being present for the Euro USD. But for the time being, given that the downward trend line initiated since the 5th of the month, this one, has been broken, we tend to maintain a bias for sideways movement of the pair. Now, should the bulls take over, we may see the price action rising breaking the 0.9735. That would be a prerequisite, clearly breaking it. And I would like to see also the 0.9735 in such a case providing some support at some point, with the next possible stop being the 0.9835. In case we have a bearish outlook, we may see the price action dropping, breaking the 0.9635, providing support here, resistance here, and start aiming for 0.9540, which is also the lowest level in our chart. Give me a sec. Here we are. Now let's move to cable. Cable, which experienced wide choppy trading yesterday. And at this point, it would be useful to actually have a second look at our resistance and support lines, as the price action has created new support levels. And practically, I would be altering the S1 down here, which would be the 1.0925. I would also be placing the R1 somewhere here. Which is the 1.1180. So we're talking about a volatility of around 160 pips here, maybe even higher. Also, I would be readjusting the S2 a little bit lower, so to match this drop here at the 1.0760. Let's also correct the labels. $1.0925, $1.0760, the 1.0630 remains unchanged. The R1 is now being placed at 1.1180. The R2 remains unchanged at 1.1425, and the R3 at 1.1730. We are providing some space to the upside for the pound. Now, despite some arguing that the downward trend line seems to be continuing, but on slowing motion like this one, I'm arguing that the RSI indicator is rising and has neared the reading of 50. It's currently at 44, 45. So it's nearing the reading of 50 once again. So probably that may imply a stabilization of the pair between the 1.1180 and the 1.0925 levels, which practically have been met by the price action yesterday. Should the bears take over, we may see the price action dropping, breaking the 1.0925, and start aiming for the 1.0760, which provided support here and here. On the other hand, for a possible bullish scenario, I would require clear breaking of the 1.1180 and the price action to start aiming for the 1.1425. Once again, though, a reminder for the time being, we tend to maintain a bias for a sideways motion between the 1.1180 and the 1.0925. It's a pretty wide spectrum here. We're talking about over 200 pips. Actually, it's 280 pips. 50 pips. Let's have a look at USDJPY. USDJPY, which maintained its upward motion. And at this point, we should correct a little bit the upward trend line. Like this. It shifted a little bit to the right. Drilling down to the 1 hour chart to have a better look, a more detailed look. Let's widen this. Yep. Once again to the 4 hour chart. So we maintain our bullish outlook for USDJPY as long as it remains above the upward trend line, guiding it, and initiated actually on the 5th. Let's have a look. On the 5th of October. There is a slight word of caution here, and that relates primarily to the RSI indicator below the 4 hour chart, which has surpassed the reading of the 70, which on the one hand implies that the bulls are in charge of the pair's direction. On the other hand, though, it may imply that the pair has reached overbought levels and may be ripe for correction lower. Also note that the price action has hit the upper Bollinger Band right here. It actually runs along it. And that could be slowing down the pair's ascent somewhat on technical level. Nevertheless, should the bulls maintain control, we may see the price action approaching, if not even breaching, the 147.30 resistance line. On the other hand, should a stabilization occur, we may see USDJPY's price action remaining between the 147.30 and the 145. Definitely, I would require breaking of the pre-mentioned upward trend line, yet at the same time the price action to respect the 145. So that would mean a movement like this. While should we see the bears taking over, we may see the price action dropping, breaking the pre-mentioned upward trend line, once again signaling a change in trend. However, for a bearish outlook, I would require also clear breaking of the 145 support line and the price action to start aiming for the 143.50. Let's have a look at USD-CHF, the other safe haven currency pair. Okay, the pair seems to have stabilized, and it has just broken below the 0.9960 support line. Let's turn this into a resistance line. So we see the price action rotating around this level. Let's go hunting for a new support line. I would be placing it somewhere here. 1, 2, 3 touches. Add, testing here. Seems to be pretty valid. I'm keeping it. And it's the 0.9680 support line. Let's correct the labels. First of all, widen the chart. At 1.0120. Second resistance line being now placed at 1.0050. First resistance line being placed at 0.9960. First support line being placed at 0.9860. Second support line being placed at 0.9765. And final support line, as we have mentioned before, is now being placed at 0.9680. Note that we still maintain our bias for sideways motion after the breaking of the upward trend line, which was initiated on the 5th, on the 6th of October. And the upward trend line was broken practically on the 11th as the price action corrected widely lower, jumped back up, and stabilized by rotating around the 0.9960 level. On the other hand, should the bulls take over, I would expect the price action to rise from 0.9960, breaking it, possibly testing the 1.0050 and move even higher towards the 1.0120. For a bearish outlook, I would expect the price action to aim, if not even reach, the 0.9860. That would allow us also to form a nice downward trend line. Once again, for the time being, given also that the RSI indicator remains near the reading of 50, it's actually right now at 53, I would expect the price action to remain near the 0.9960 resistance line and continue to rotate around it. I think the rotation is more visible on the 1 hour chart. Let's drill in. Yep, here it is. Drilling back out to the 4 hour chart. Moving now to commodity currencies, and we're having a look at AUD USD. Initially, that would be the first price action, which is currently testing the 0.6270. Once again, low volatility. Note the breaking of the downward trend line, a jump higher, correction lower, and the pair stabilizing around the 0.6270, actually with the main body of the price action over the past 12 hours being just below the 0.6270. So that may prove that the support line has now been turned into a resistance line. However, that would be more visible in the 1 hour chart. It is. We tend to maintain a bias for sideways movement currently, yet possible strengthening of the US dollar may drive the pair even lower, starting to aim for 0.6110. On the other hand, should we see a disappointment from the release of the Fed's meeting minutes tonight, and the Aus is allowed to gain some ground, we may see AUD/USD rising and testing, if not even breaching, the 0.64 resistance line. We're talking about 130 pips upwards. Okay, let's have a look also at USD CAD. USD CAD, which also tended to remain in a sideways motion and seems to have broken the upward trend line guiding the pair, as it respected the 1.3845 resistance line. So we tend to maintain our bias for the sideways motion to continue between the 1.3845 resistance line and the 1.3650 support line. Once again, I would expect the price action to remain this level also due to the fact that the RSI indicator now is pretty near the reading of 50. It's actually at 56.5 and dropping. So that would imply that the market may be rather indecisive about the pair's next leg. I would also see the case that should we see an upward motion, the bulls taking over, the price action of USD CAD to break the 1.3845 resistance line and start actively aiming for the 1.40 resistance level. That would be a level which has not been seen for months now. You can see that the last time we had a movement at this level was at the 26th of May 2020, 2 years ago, plus almost 2.5. And drilling back to the 4-hour chart, even higher we note the 1.4170. On the other hand, in case the bears take over, we may see the price action dropping, breaking the 1.3650, and note how the level provided support here, resistance here, here, more support here, and start aiming actively for the 1.35 level here. Okay, let's have a look now at NZD-USD. NZD-USD, which also seems to have stabilized just above the 0.5570 after bouncing on it. At the same time, we note that we may be having a mid-level here. Definitely the lowering of volatility for the pair was more than evident by the converging Bollinger Bands. At the same time, the RSI indicator is pretty close to the reading of 50. It's actually at 46.6. So I would like to make some readjustments here and set the new support level lower as one at the 0.5535. The new resistance level lower as well, and that would be around the 0.5855. Also, let's readjust the resistance line, second resistance line at 0.5810. And I would be placing this support line. Note how it provided support here and here as a new resistance line. That would be the 0.5940. Okay. Let's now go hunting also for support lines. You have to go way back here. Definitely out of the scope of the chart. We're in the weekly chart now. And I would be placing a support line at 0.430. And the new support line could be placed here. That would be the 0.5290. Drilling back to the 4-hour chart, readjusting the chart. Let's also correct the labels. Final resistance line being placed now at 0.5940. Sorry, that's not 69, 59. Typo there. Second resistance line being placed at 0.5810. First resistance line being placed at 0.5650. First support line being placed at 0.5535. Second support line being placed at 0.5430. And final support line being placed at 0.5290. So we tend to maintain a bias for a sideways motion after the price action of NZD/USD has broken the downward trend line, which was initiated around the 6th of October. Actually, many may argue a little bit earlier. But the main thing is that the downward movement has been interrupted. And the pair seems to have stabilized between the 0.5650 and the 0.5535. Now, given the narrowing of the Bollinger Bands and especially the fact that the RSI indicator seems to remain close to a reading of 50, implying a rather indecisive market, I would be noting that we may be expecting a sideways motion of the pair to continue between the pre-mentioned levels. Should the bulls take over, we may see the price action rising, breaking the 0.5650 and start aiming for 0.5810. On the other hand, should the bears take over, we may see the price action dropping, breaking the 0.5535 and aim for 0.5430. Okay, let's have a look at gold's price action. Gold, which seems to be stabilizing and now has formed a new support line right here, which, by the way, seem to also provide support here and here. So that would be the 1660. Same time, we may raise a little bit the resistance line to cover this touch here at 1685. Also provided resistance here, tested here. Pretty well, we're keeping that. I'm keeping the R2, providing resistance here, and the R3, aimed for here, tested here. While we're also keeping the S2, tested here, and the S3, the low point of our chart. Let's make the necessary corrections on the labels as well. 1706 remains. 1685 is the new first resistance line. 1660, the new support line. 1635 remains, and 1615 also remains. Let's lock everything in. Before that, let's widen a little bit the chart. There we are. And the resistance levels. There we are. So for the time being, we tend to maintain a bias for sideways motion between the 1685 and the 1660. Should the bulls take over, which probably does not seem to be the case much, given that we have a downward movement of the 20 moving average. Also note the downward slope of the 100 and the 200 moving average. Note also the RSI indicator, which is fighting its way upwards, but it's still at rather low levels. That's at 41. So it's not exactly a probable scenario for the bulls to take over right here, but it's still possible. Yet in such a scenario, we would expect the price action to rise, break the 1685 resistance line, thus creating a higher peak than this one, and start aiming for 1706 in an effort to recapture the lost ground here. On the other hand, should the bears take over, which it's possible given what we have mentioned before about the moving averages and the RSI indicator, we may see the price action dropping, breaking the 1660 and start aiming for 1635. Also note that we have one peak, then a lower peak. We may see the next peak being even lower. On the other hand, the 1660 seems to be holding its ground, so we may see a downward triangle being formed here. For the time being, and unless the 1660 or the 1685 remain intact, we maintain our bias for sideways motion between the pre-mentioned levels. Let's have a look at US 30. That's Dow Jones. Note that we have a nice sideways movement breaking the downward trend line. It's the hesitation which we had mentioned in the fundamentals before, and the mixed signals that US stock markets are sending right now. There seems to be a stabilization between the two levels, and we may see that sideways movement be maintained unless we may actually also notice that we have some weakening, or if you prefer, a less cautious market. Which case we may see the price action of Dow Jones rising, breaking above the 29,670 and start aiming for 30,340. Definitely I would require a higher peak than this one, and the next throw to be even higher than this one. We have 1, 2, the next one should be somewhere here. While the peak should be higher than the 29,670. On the other hand though, please note that there is a downward slope of the 20 moving average of the Bollinger Band. Also the upper Bollinger Band has a downward slope, while both the upper and lower Bollinger Bands have started to converge, implying less volatility for the index. It's characteristic also that the RSI indicator below the 4-hour chart is currently at the reading of 50, has reached it, implying a rather indecisive market. So all of that tends to concur that we may see the price action being maintained at the current levels. On the other hand, should the Fed's meeting minutes actually sound hawkish enough, we may see the price action dropping, breaking the 28,950 support line, and start aiming for 28,130. Let's have a look at the validity of this too, though, because we have to go some months back here. Actually, we have to go back until the 2 years, to the 19th of October, to see that it had provided support here, here, resistance here, resistance here. So it seems to be pretty valid. I'm keeping it. Also the S3, the 27,150 was tested on November 2nd and on the 30th of November 2nd, 2020 and the 30th of September 2020. So that should hold as well. I'm keeping both. Drilling back to the 4-hour chart, readjusting it. Once again, we maintain a bias for a sideways motion between the 29,670 and the 28,950 for the time being. Okay, let's move to another US stock market index. That would be the Nasdaq US 100 cash. US 100, which has moved, and note that there is a wide downward motion which seems to have been interrupted here. It would be something like this. Sorry. And the pair has stabilized, rotating around the 10,880. But before we move that, we have to make the necessary corrections. Definitely the 11,300 is to turn now from a support line to resistance line. I would like to check the validity of the 10,315 though. And as we are going to be drilling, going back to see that, we may have to drill out to the daily chart. Okay, the S1 seems to be holding. The S2 seems to be holding. However, we may be discussing also this level here. Nice touch here and here, pretty valid. But at the same time, note this level. There is a peak here, definitely, which could be a mid level. I'm keeping these ones, and that would be the 10,500. And the 10,120 in green, please. Readjusting the chart. Let's make the necessary corrections on the labels. So we're pushing the S3 a little bit lower to 10,220. The S2 also drops lower to 10,500. The S1 is now being placed at 10,880. The R1 is being placed at 11,300. The R2 is being placed at 11,615. And the R3 is being placed at 12,020. Now we have a breaking of the downward trend line guiding it, hence we tend to see the case for a sideways motion of Nasdaq, revolving its price action around the 10,880 level. Note the RSI indicator, which is currently at 40, implying a rather bearish sentiment. Yet on the other hand, we note that it's moving up, it has an upward slope, which may be implying that the bear's influence is slowly fading away, especially should the oscillators rise even further. So for the time being, we tend to maintain a bias for a sideways motion, although some bearish tendencies may still be present. At this point, I would also like to consult how the Bollinger Bands are behaving. Let's insert them as well. 20 moving average, 2 deviations, dark blue, yes please. Okay, so it has a downward slope, far steeper than the 100 and the 200 moving averages, but still present, so there are still some bearish tendencies for the for the index, which I wouldn't be dismissing outright. Nevertheless, should the bulls take over, we may see the price action rising and testing the 11,300. Note the resistance marked here. While should the bears take over, I would be placing the 10,500 as the next possible stop. Mind you though that it's a level which has not seen any price action for over 2 years. So whether that's valid or not, maybe a little bit questionable here. Okay, let's have a look at WTI cash. Let's see how oil is doing. Oil, which was dropping yet corrected higher, we have to set here a new resistance line a little bit higher, and that would be the 86.80. I'm holding the R1 as well as the R2 and the R3. On the other hand, the S1 could rise, however, this number of touches, I'm keeping it for now, and the S3 definitely remains, possible S4 somewhere here. Okay, let's correct the S1 label. T6.80, and let's drill into the 1 hour chart, where I would like to see whether yes, it has been broken. What I'm trying to tell you guys is that there was a downward motion here. Some are placing it even starting from here. However, that downward motion was interrupted. And that's another indication of a sideways movement for WTI's price. Let's drill now to the 4 hour chart. Note there is an indicator which is at the reading of 50 exactly. Once again implying a rather indecisive market. And we may see oil's price remaining between the readings of 90 and 86.80. Now, in case we have a downward motion and the bears take over, we may see the price action dropping. Definitely, we would require clear breaking of the 86.80, which provided support here. So we would require a new lower trough. And the price action could start aiming for the 82.45. It's pretty wide, I know it, but we're talking here about a $4.35 distance. It's pretty doable. Note how practically the commodities price had this volatility, which was approximately of the same range in one day. So it's feasible. It's quite feasible for oil's price to show such volatility within a day. However, that would be a strong volatility. On the other hand, should the bulls take over, I would expect the price action to rise break the 90 resistance line and start aiming for the 90.32 resistance level, a level which practically capped the strong upward motion which was initiated on the 28th of September and moved all the way up until the 10th of October. It was a very wide one, and that exactly shows us the strength of R2 on a bullish scenario. Once again, for the time being, we tend to maintain a bias for sideways motion between the R1 and the S1. And that should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Hello everyone, my name is Emily. Today we are going to talk about the two forms of analysis that we can use to analyze a stock. These are fundamental and technical analysis. Fundamental analysis is the process of analyzing a company's financial statements to help decide if its stock is a good investment. Basically, fundamental analysis takes the view that economic forces drive prices. A fundamental analyst is going to approach the marketplace by taking account all of the information in a given market, such as earnings of a company, the direction of interest rates, the economic environment on a domestic and global level, and what the competitors of the company are doing. The fundamental analyst will come up with a fair value, a price where he thinks a stock should be trading. If the stock is above that fair value, then it should be sold because of its overvalue. If the stock is trading below the fair value price, then it should be bought as it is undervalued. Technical analysts believe that the fundamental elements of a stock's value are already accounted for in a stock's price, that prices move in trends, and that historical patterns in the market and in stock prices tend to repeat. Basically, technical analysis looks at past price action to figure out what's likely to happen in the future. Technical analysts use price movement charts. They assume that all information studied by fundamental analysts is already priced into the price of the stock, commodity, currency, or any other trading instrument. Thank you very much for watching.
Hello, my name is Christina, and today I will talk about GDP. Gross domestic product is the monetary value of all goods and services produced in a nation during a given time period, usually a year. Basically, it's a record of everything bought for money during the course of 1 year. Consumer purchases from a chocolate to a car and counted in the GDP. When businesses buy computers or export goods overseas, the transactions all increase the GDP. Government spending also contributes to the GDP. A related statistic is the GDP growth, which is a percentage that shows how fast the economy is growing. If the annual rate of GDP growth is 3%, that means the economy is 3% larger than it was the previous year. The rate of GDP growth changes depending on the health of the economy. During an economic downturn, the economy contracts and GDP declines. For example, the recession that lasted from 2007 to 2009 was a severe period of economic decline. A GDP figure that shows strong economic growth means that businesses are making money and can hire people. Unemployed people are more likely to find a job and consumer spending rises, leading to more profit for businesses and even more hiring. Government leaders analyze GDP reports when creating economic policy. The US Central Bank, the Federal Reserve, uses the GDP report to gauge economic activity. Investors look for signs of sustainable economic growth in the GDP report, paying close attention to the information it contains, especially corporate profits. Business leaders analyze the economy's performance as is reflected in the GDP report so they can decide on future investment and production. As a measure of the sheer size of the economy, the GDP provides economists and ordinary citizens alike with a convenient and accurate measure of economic vitality or the lack of it. Thank you for watching.
Okay, guys, let's begin today's session. All right, today's session is on idea and validation. Just let me enable the chat panel, right? So there's this on your Zoom, there's this place called, there's this function called chat. Feel free to send your questions through there because today we are going to cover a little bit more advanced topic. It's on idea and validation. It's a particular trade management style which is a little bit less used, right? It's the ugly cousin of break even, right? Everyone's very familiar with break even, locking in your profits, right? Letting your trade, be risk free and run, right? But idea and validation is the opposite, right? Idea and validation actually, is trying to help you get out of your trade as soon as possible. Okay. Now, without further ado, let's begin today's session. Right, I'll be passing on the time to Annabelle later, who will take you through the rest of the session. I do need to let you guys know a couple of important links, especially in the if you want to sign up for upcoming webinars. Right, first thing, you go to IronFX.com, go to IronFX School. Right, there are two links which I want to show you over here. One is the webinar, and one is the VIP room. Okay. For the webinars, if you want to see what are the upcoming webinars, just need to come down here, right? Give the page a couple of seconds to load, right? And there you go, right? When you click on English, you can see all the upcoming webinars. Every Wednesday and Thursday, same time, same place, we have the webinars, right? Wednesdays are our educational sessions. Thursdays are our live trading sessions, which you can just tune in and listen to, all right? Now, the next thing is that if you have an IronFX account, you can actually find us, right, in the VIP room. Same thing over here under IronFX School, click on VIP room, and you should be able to find it. In the VIP room, you'll be able to ask us questions on where the markets are heading, right? It's a pretty nice, it's honestly a pretty nice room for you to practice and hone your analysis, right? In there, you can, if you just scroll down, you can see all the different benefits you can get, depending on your IronFX account size, right, on how much you have funded, right, you will get different access levels. Right, bronze, silver, gold, all the way to the platinum and diamond, right? All of it depends on how much you have funded. Okay. Now, how does the VIP room look like? It looks like this, right? Once you come in there, there's all the channels by the side, right? It's the chit chat. There's a fundamental news that we look at, and most importantly, there are the markets. Clicking on any of the markets will load the charts on the left and the charts on the left and the chat on the right, right? So in this example, maybe you're looking at euro-dollar 1 hour. You might be wondering if this is nice level to wait for price to pull back to before taking a trade. You can come in here and say, hey Desmond, right? Do you think we should wait for price to rise to this level before a potential bearish move, bearish reversal? So what you can do is you can highlight this word level. You can click this button called link object to text, right? And you can select anything on the chart that you just drew. In this case, we're going to click on this button, right? And confirm. So what happens is that once you've linked the text, anyone who is reading it for the first time, all they need to do is hover over this highlighted word, and you can see it lights up. Okay, this brings a lot more context to our discussions, right? It helps us better understand exactly which level you're referring to. And then of course I can, I can give it a reaction. I can take then go on a dedicated discussion with you. Here is like, yep, I think so. It's good. All right. So I can have a dedicated discussion with you in this manner. All right. So how this benefits you guys is that you can practice your technical analysis, practice your fundamental analysis. If you have questions, you can run it by us, and we'll do our best to really take care of you, when we see the questions. Okay, what you learned today, you can then apply in the VIP room. You don't need to wait for another week to see, before we meet again to have this chat. All right. But yeah, so this covers quite a bit of links that I do want to show you, right? Last link that I want to show you is the IronFX YouTube channel. Go to playlists, right? There is this particular playlist, at least for the English webinars, right? It is called IronFX Webinar Series for Beginners, right? You can click on it and you can see all the different webinars that we've done, right? You can just, you can watch all this. There's also the advanced series, as you can see over here. We cover a little bit more, a little bit tougher strategies over here, right? And we have the intermediate series. You can watch it all over here, and a lot of the previous webinars, like our trade management 1/4, 2/4, the previous two that we did, you can find it in this intermediate series. I'm going to send it in the chat for you guys to see, right? You can tune in if you want to, just in case, if you're covering any of the topics on trade management today, which you're not too sure about, you can refer to this. All right. Now, let me just return back to the webinar. Okay. Before I continue, just to let you guys know, disclaimer, everything in this webinar is educational in nature. So please do your own due diligence before you guys trade. Nothing in this webinar should be construed as investment or trading advice, right? Once again, do your own due diligence before you guys trade. All right. Our host for today is going to be Annabelle, right? She's an analyst here at Everest Fortune Group, a finalist for 2019, 2020, and 2021 for Best FX and Best Equity Research, right? And she'll be taking you through this entire webinar on trade management, particularly idea and validation. The first part of it, we'll really be breaking down the anatomy of a trade, right? That means, what goes into a trade. A lot of people think it's just entry, stop loss, and take profit. But actually, there's so much more to it. There's break even, partial profits, idea and validation, trading stop losses, right? A lot more goes into what makes up a trade. Okay. After that, we'll go into a quick recap on not only your take profit and stop loss placement, but also break even and partial profits. Then we go into the exciting world of idea and validation, right? Just how do you use it, right? What does it mean, right? And some live examples on how you can apply it. Okay. Now, if you have questions, don't hold back. Don't hold back your questions as you ask her. I think it's important that you guys clarify if you have any questions. Otherwise, I'll be handing the time over to Annabelle to take over the rest of the webinar. Annabelle, over to you.
Hi guys. Can you guys hear and see me clearly? Let me know in the comment section, yeah, because I have another page that is open, so I can see whatever questions or any comments that you have, any requests, right? Just let me know. Give me 1 minute to adjust. Okay. 1 second. Okay. So before I start, yeah, I just want to know if you guys can see the screen clearly. Just let me check, yeah. Okay, in today's session, we'll be going through the third part of the trade management, which is idea invalidation, as Desmond has mentioned, right? Okay, so I'll be going through that. Agenda of the day, anatomy of the trade. I'll be going through also the take profit, stop loss placement, and break even partial profit recap, which is part 1 and part 2 of the series, right? Idea invalidation definition, where to place idea invalidation, and some examples before I go to a live chart if we do have the time. Okay, so let me start with anatomy of the trade. So as beginners, as traders, we often only focus a lot on the entry itself. So spend a lot of time and effort thinking of the entry, where to enter, before we actually take a look at our stop loss and take profit. And this is only the first part. So this often, the break even, the partial profit, trailing stop loss, and idea invalidation are often not even a thought, not even considered, not even a thought that we have, right? Because stop loss and take profit already came in as a second thought, because entry is always first. Because we always are thinking, when is a good time to enter? Is it a good time to buy or sell here? And stop loss and take profit comes in after, as afterthought, right? We'll then enter first before we take a look at, oh, where's the stop loss, or where should we take our profit, what's our RR, right? And then there is this break even, partial profit, trailing stop loss, idea invalidation that is not even a thought that we have, but these are all as important, right? These are all as important. So that's why there is this anatomy of trade that we are going through. So today we are talking about part 3 of 4, which is the idea invalidation. The part where we actually say, hey, we made a mistake on this trade and it's time to give up the trade, or how do we actually get out of this trade, right? And then the part 4 of 4 will be our trailing stop loss. Okay, so a quick recap before I start the session. Take profit and stop loss. Okay, this is very important. So this is the basic, or the basis of a trade itself, right? Remember, there is always a major resistance area or a confluence area. If you guys remember what is confluence, right? It's a place where all your key levels or all your fib levels align, okay, forming this resistance zone. Okay, so apart from your trends, your support resistance line, there's also the confluence zone, which you have to take note. Okay, these are the commotion zone, the magnetic zone that prices always like to go back to. So in this instance, always remember, if you are taking profit, always take before TP, before the commotion, right? Because you do not want to end up having many people taking a profit, and then the price actually goes in the other direction, and instead you actually hold on to the trade hoping to get the full 100%. Okay, so your stubbornness actually causes you to miss the whole trade. Okay, so instead of 100% profit, you should always take maybe 80 to 90%. Okay, forgo the 10%. Don't be too fixated to a fixed take profit level, right? Always take before, and then stop loss always beyond, meaning above your magnetic zone. The reason why it's above is because you need that special or the additional buffer zone for price to react off, because price tends to go to the magnetic zone to test the levels, right? You just want the additional buffer in case you get stopped out. Okay, remember to be careful of the major resistance area, or we call it the magnetic zone. Okay, so this is the take profit and stop loss. Then we have the break-even placement. So where do you actually put your break-even placement? Do you put at your entry? Do you put before or do you put after? Right? So let us take a look at this. Break-even is a level where you are in profit and recognizes that there is a risk of reversal. So often, break-even is where you move your take profit or your stop loss. It's often where you move your stop loss. Yeah. Okay. Later I'll explain why I say this. So break even is often where you move your stop loss. So for example, you are in a trade. Okay, let me erase this. It's slightly messy. Okay, so for example, we are in a trade. Okay, there is one bounce off, two bounce, and we think like, hey, price would actually come back down because it's a resistance that has actually form a double top. Maybe it would form a triple top. So we actually, okay, maybe for this chart, sorry, they are playing a breakout. Okay, so this will be the entry. So they are hoping that you break out, and then this is the take profit level. Okay, let me clarify. They are hoping for a breakout in this instance to take profit at this level, the green zone. Okay, so for example, if I have a buy entry here, okay, and then my price goes up, blah blah blah, my stop loss would be probably here. Okay, beyond my previous this is the support level, right? So it has to be beyond because you want the buffer. Okay, so beyond that swing low here, so your stop loss is here, original stop loss. Okay, but hey, you see, like, you realize that a price is not actually going in, it's not quite moving in a direction that you want to at this point in time, and you are afraid that price might reverse, or there might be other news, just like how there was a Russian news at 2 to 3 p.m. today, and then it caused the DXY to actually spike up. All the other currency pairs are moving, so there could be sudden news, or it's just not in your favor. Hence, you move your stop loss to your entry, right? This is a modified stop loss. So break-even placement in this instance, it means that you are in profit. Okay, so you move your stop loss. So break-even in this instance means that you are in profit, and then you want to secure or you want to protect your trade. So you move your stop loss to your entry. Okay, so you move your stop loss up here. In case it actually comes back down, you are protected. Or some people, they prefer to, they want to take slight profit. You can. So you can put your stop loss slightly above your entry level. Okay, so you would have some form of profit instead of a full break even. Okay, so what it means here is it is basically saying if I am right, price should go all the way to my target, but if it goes back to entry, I'm wrong and I should get out. Okay, so essentially break even placement means you don't make money, but some people, depending on your own trading style, they like to put it slightly above. Okay, now partial profit placement. So what is partial profit? So for example, you're in a trade and you do not want to wait, or you feel like you don't want to go through the turmoil, or that maybe in a couple of hours there will be some news and you want to get out of the trade. For example, this is your buy, This is your take profit. Okay, in between, you should take some partial profit. Okay, in case the news in 2 hours actually comes out not that great for your currency pair, for example, USD yen, or major news that might impact it. So some people, they prefer to take a partial profit instead of waiting for the full TP. So in case price reverses, you still have this much of profit that you made previously and taken. So today's topic is actually quite simple, and the topic of idea invalidation. It's a very simple and easily understandable topic itself. So I'll run through it. Let me know if you have any questions in the comment section, or if you want me to run through any of things that I've said and you couldn't understand, right? So any idea what is idea invalidation? Anyone? Okay, it might be quite foreign to some of you guys. So in simple terms, the invalidation point in FX is the point at which you would be willing to close out your trade if the market moves against you, right? So for example, if you buy here, the buy point, and then your stop loss is here. Your idea invalidation is usually a point of confluence, right? Because remember, your point of confluence is all the fib levels, all your support resistance, or the magnetic zone. So your stop loss should always be beyond. Hence, there is my stop loss above, correct? So if I have a buy entry here, and then my price came, no, sorry, my stop loss, this should be a sell. Sorry, this should be a sell. So if it moves against me and then it comes to my idea invalidation region, I will know that, hey, I should be worried, and I should be telling myself that this was a mistake, a wrong trade. I should be looking for a way to get out. Okay, so idea invalidation is when it's a point where you know that you should be closing your trade soon, or you should be finding ways to get out of the trade as soon as possible. So this point is important to consider when you place your trades, as it can help you to avoid all the unnecessary losses. So in trading, right, obviously you want to maximize your profits, and you want to minimize the losses, correct? So all these trade management styles, they help you to your break-even points, your partial take profit. They actually try to aim and target this, maximize profit and minimize losses, correct? So knowing where your invalidation point lies can help you stay in control of your trading strategy and make sure that you do not lose any more money than you have. So when the idea invalidation is placed usually before the stop loss, it is in the zone of confluence. So always remember, it's placed before the stop loss and usually in the confluence zone. Okay, or maybe some key levels, your key support or your key resistance. Okay, it's also a point where you admit that you might be wrong in this trade. You made a mistake. Price is going against you, and how should you get out? Okay. And remember previously, when I mentioned that your break even, right? Your break even point is when you move your stop loss to your entry, correct? Because in the break even situation, you are in profit. Okay, but in this instance where we are talking about the idea invalidation, right? Most of the time you are already in the red, so you are already in the loss. Okay, you're already in the loss. Hence, you can only move your TP to your entry. So that's the main difference between these two. Okay, if you need to, you can have a screenshot. It's quite easily understandable, I guess, right? Because for idea invalidation, most of the time you are already in your close to your stop loss, right? Because your stop loss will be here. Idea invalidation is usually slightly before, which is a confluence zone. So you are already pretty close. There's nothing you can do. So the best case scenario is for price to actually touch your II and reverse back to your entry. Okay. Or else, worst case scenario is you hit your stop loss. Okay. There's two scenarios to it. Okay. So for idea invalidation example, okay, idea invalidation is usually placed before your stop loss. It is the level where you basically admit that you are wrong and you have to get out ASAP. Okay, it's totally wrong trade. So when this level is reached in the purple zone, okay, is the idea invalidation is in purple. When the level is reached, your take profit is moved to your entry. Highlight take profit, okay? Because you're already in the red, you can't move your stop loss forward. It doesn't make sense. So you move your take profit to the closest, to as close or to your entry level, okay? Giving you a small chance to get out at break even. So this is the best case scenario, okay? To get out at break even. This is like your, you trying to salvage the whole trade or trying to protect or minimize your loss as much as you can, okay? So your entry point is here. For example, you are looking at a sell. Yeah. So this in this situation is sell because, for example, you're looking for a reversal here, given that, you know, hey, it's a double top, it might form a triple top. So original take profit is here. You are looking for a sell. Okay. And then stop loss would be your stop. This is your II. So your stop loss would be beyond. Always remember, stop loss is beyond. Take profit above. Before, right? Take profit before your magnetic zones or before your resistance level, support levels. So price is originally going in the direction that you are wishing for because your take profit is here, right? However, it goes beyond, it reverses, bounces off, and then it touches your touches your entry level. This is where you should be slightly worried. And then if it goes beyond, this is already you're already losing money. Okay, so it goes beyond your entry level and touches your II, and you know that, okay, this is a mistake, a wrong trade. How do I actually get out? So at this instance, when it touches my II, I would move my profit back here. In some situation, if there is a bounce back, most of the traders, they like to think that, hey, you know, there's a chance that it might go a little bit into my profit levels. Maybe I should wait, or maybe I should just move my take profit levels here. But no, do not do that, because that's a trap. Most of the traders, they like to do that. You should, when it touches your II, you should already know that, you know, it's a wrong trade. Prices are not in your favor, it's going against you. So don't risk that 2% or that 3% just to, you know, get stopped up. Okay, so always, if it touches your II, just move your take profit levels back to your break even point. So modified take profit, manage to get out of the trade at break even before price rolls further to stop you out. Okay, so idea invalidate, it means that you admit we are wrong and move take profit entry to entry. This hopefully gets us out of this losing trade. So it's idea invalidation is also kind of like a, yeah, you know, you try to salvage the whole situation to minimize losses, right? So like I've mentioned, For II, it is moving your take profit to your entry because you can't move your stop loss forward given that you are already in the red. So it's kind of only hoping that, you know, price would come back to your entry level and you know, you just get out. So it's sort of like hoping or salvaging the whole situation here, okay, for idea invalidation. Whereas for break-even point, you are already in profits, okay, so you do not have to worry about anything else. You just need to know that in case, you know, prices actually come back down, I'm already at my break-even line. You know, I wouldn't have any losses. So these are the tools, or these are the tools that traders use, that some of us use to minimize or to protect our trades. Okay, there's nothing wrong with making a wrong trade or you know, making a mistake. Okay, because most of us, we like to, when we enter a trade, we always think that, you know, this trade is definitely right. If not, we would have entered it, right? With all the effort and all the time and all the focus and how we prioritize the entry. Hence, we always hope that, you know, it will go in a direction that we want. But idea invalidation, break-even points, to know where your stop loss is, these are all as important. Okay. Okay, now let's try, let me explain some this example before I move to a live example. Okay. Let me know if you have any questions in the comment section. Let me get a sip of water. Okay. So we have a entry point here where we are looking for a buy. Okay, we'll take profit here. So always take profit. It is a 50% tip level as well. And then we have identified our confluence stop loss area, which is our 127.2% extension and negative 27.2 expansion based on the fib level here. Okay, so we have entry, we have a take profit, we're looking for a long position at so if my confluence zone is here, would this be my stop loss level? Correct, because this is my buy entry, this is my take profit. So should my stop loss be here? Or what would that be? Should my stop loss be there, or should my stop loss be above, or should my stop loss be here exactly, or should it be at A, this level, above, or at B, below? I have some answers. Most of them says that it's right here at the exact stop loss where I drew the stop loss. But if you remember my previous slides on the stop loss and take profit placement, always remember stop loss beyond. Take profit before. Okay, so given this case, if this is the level that I am looking at a 50% retracement level, I wouldn't take my take profit exactly here. I would take slightly before. And if my confluence zone is here, where all my commotions or all the resistance are gonna happen here, I will put my stop loss beyond, right? After. So your stop loss should be here. This level is the II, my idea invalidation. Okay, remember, your idea invalidation is often a zone of confluence because your stop loss is always after. Okay, idea invalidation equals your confluence zone, or the level where there are a lot of commotions, if it's easier for you to understand or remember. So it's a confluence zone or a commotion zone. I would like to call it commotion zone or magnetic zone, okay, whatever. And then your stop loss is always after. Okay, so if my stop loss is here, for example, my II is before. So stop loss is always after. Okay, if my II is here, my stop loss is here. Okay, remember. Okay, so back to the chart. Okay, so stop loss is placed after my confluence zone. This is my II, and then this is my stop loss. Idea invalidation, my stop loss. Okay, entry, take profit, stop loss in place. Now let's take a look. Price actually came all the way down. Okay, it didn't even bounce off here, so it actually came crashing down. Bam, hit your II. This is the point where you should tell yourself, okay, this is a very bad move. Okay, no matter how much thought, effort you have put into placing this trade, you thought like, you know what, this is a very nice double bottom momentum. Okay, or there are a lot of confluence zone, and then you have calculated everything else. Just admit that you're wrong, because it didn't even bounce off. It came all the way down, touch your idea invalidation. Okay, at this moment, you should think of ways, because there's only two scenarios that's possible. One is to hit your stop loss, which obviously nobody wants that to happen. Or number two, you try to get out, meaning you bring your take profit back to the entry, because that's the only way. That there are only a few things that you can do here, right? So the best case scenario is hoping that, price would come back to this magnetic zone to test again, where you just get out of the trade ASAP, because you already know that price is not in your favor. Okay, I understand that when it comes back here, some of you might be thinking, hey, there's a chance that price might go a little bit further into my entry, or even further, and then this might be my 10% gain, okay, or my 2% gain, okay, depending. But what I'm trying to say here is that you shouldn't be greedy over this, because you are already almost at the stop loss, and you should be looking to get out of the trade ASAP, looking for ways to salvage and minimize loss. Okay, so move the take profit levels down to your entry, and hope that price will reverse from the II instead of stepping out. Okay, most times it will come back to the magnetic zone to test again. Okay, it did. Okay, out at break even before it hits my stop loss. Okay, so more often than not, people always wanna get the 1 to 2% return, when it bounces off the idea invalidation, but try not to go to that zone. Learn how to manage this this kind of situation, where you already know that the trade the direction of the trade or the currency pair is not in your favor at all, just admit that you're wrong, okay? Because these are all little things that affects your habits and your psychology of how you trade. You know, over time it will become a habit itself. So I think this is a good habit to learn how to to know when your idea is invalid instead of thinking that your trade is always correct. Okay. Any questions, let me know in the comment section before I move on to the live charts for real life examples on how to place. Okay. Okay, let's move on to my live chart. Probably can take a look at one of the examples before I move on to my next webinar. So it might be slightly rushed, but we could do one live chart. Okay, in this chart, I will give you an example. Wait, I shouldn't use it. I'll give you an example of the whole part 1, 2, and 3, meaning your stop loss placement, your take profit stop loss, your break-even partial profit, as well as your idea invalidation. I'll try to combine it all together. Okay. Okay. Is this all the XY? Okay. Okay. Let's try. Okay. So let's take a look at this chart. Okay, for example, if I were going for a short, right? Thinking that this is just an example. So I'm taking DXY. We're looking at DXY now. I'm looking at a USD weakening. Okay, for example, because yes, it's at an all-time high, and tomorrow, or rather this tonight, there will be some key news. If you guys know, the Fed is gonna speak again. And I'm thinking that maybe, you know, price would reverse. Okay, so we are looking at a sell entry here. Okay, and I'm looking at, this is just solely for example purposes. Do not take it as a real trading advice. Yeah. Okay, so this is your stop loss should always be above your confluence or whatever resistance support levels that you have. Okay, that's your stop loss above. Okay, the 127 extension is the only confluence I have, because in DXY is at an all-time high, and I have to scroll back all the way to, you know, year 2002 to have another benchmark for. Okay, so we'll just stick to one resistance level for now. Okay, just for example purposes. So this is my II, correct? Because your stop loss is beyond your II. Okay, your II is usually slightly below. We have a sell entry here at my previous high. Okay, take profit, I'll probably put it here because, give me one sec, take profit here because this is a key, you know, support level which the prices has failed to break. I will put it here. It's probably my, let's see, 23, 30, or 50. Okay, it's about my 50%, around my 50% retracement level. So, okay, this is my, let's see whether there is any more. Okay, not as entirely. Okay, maybe not. But anyways, okay, so this is my 50% retracement level, which is my take profit. Oh yeah, that's a 60. Okay, this one also. So my confluence. Okay, sorry. Okay. If you guys can see me, because the computer just, the session just went blank. Okay, let me know in the comment section. Okay, can you guys hear and see me? Hello, I didn't start from the beginning. Can we get links to training? Okay, I will send the link later on here because all these are recorded sessions. I'll paste a link here for you to rewatch it. Let me know if you can see and hear me because the session just went blank for like 5 seconds. Okay, I will continue with the session. Okay, so my sell entry is here. Take profit. Take profit here. My stop loss is here. Beyond my idea invalidation zone here. Okay, I'll use it as purple. Okay, light purple. Yeah. Okay, so we know stop loss, take profit. Okay. Always place it at always place your stop loss beyond. Okay. Take profit. Oh, okay. So if your if there is a zone here or there is a level here that tells you that, hey, you know, there might be some resistance going on, always take profit slightly before, okay, because you do not want to come to this zone and having go through the emotional turmoil. You just take 80% profit and that's it. Okay, stop loss always beyond because you need some buffer. You know, you need some buffer zone here. This is the II is the zone where, you know, prices will come here and have some commotion. So usually it will reflect it off. Okay, stop loss is above, or we call it beyond. Okay, so that is for your part 1 series, stop loss, take profit. Part 2 series where we talk about your break even. I mean, where's the, okay, your break even. Your break even. Break even is always usually means that you are in profit and you wanna be let me think how to phrase it. In profit, not want to risk any losses. Okay, so you're technically in profit, but you do not want to risk any losses. Hence, stop loss, 2, and 3. Okay, so this is what break even means. Usually you are in profit already, and then you are afraid that, you know, there might be any reversal. So you put your stop loss to the entry level. Okay, but usually this tends to happen when it moves a certain point or a certain percentage into your profit. Okay, not like a 1-2 pip move. I mean, depending on what's your risk appetite like, most of the time it usually has to move a certain level before you move your maybe before you move your before you move your stop loss to entry, or you are very certain that, you know, that there will be news that is in favor of the direction of the currency or the market direction. Okay. And then, so this is your break even. And then you have your partial profit. So partial profit is self-explanatory. Okay, so it means that you're in profit and you do not want to lose any part of it, or you do not want to go through the turmoil of waiting, or you know that in a couple of hours there will be news that are coming up. You just want to take that profit off the table. So you can take partial profit and leave the rest of the trade running. Okay, so that is partial profit. And then we have the last part, part 3, I mean, which is today, your idea validation, which also means that you are already in loss. Okay, you're already making losses. And you want to salvage situation by moving take profit, because it's not possible to move your stop loss to entry. Okay, so this is today's session. So this is the II. So what happens here is, if price actually goes down here, you take profit, that's great. Okay, if not, price comes here and you feel like, hey, there might be news in 2 hours, you are afraid, you can take partial profit here, take profit here, take partial profit, and let the rest of the trade run. Okay, this works as well. Or if prices came all the way here, you feel like, hey, I should move my stop loss to my sell entry, because I do not want a scenario where I have to go through the emotional turmoil when my price actually come up here. Okay, so you move your stop loss to your sell entry, also possible. And then the last part, which is idea invalidation, is when price comes down slightly and then bounce up to your pass your sell entry to your idea invalidation. This is the part where you have to admit that you are wrong, and you are hoping that you could get out of the trade ASAP. Okay, so you are hoping that price will actually come back to test your resistance level here at your sell entry. So move your take profit up here and hope for the best case scenario where prices actually come back here to tap you out or stop you out of the trade. In the worst case scenario, it would stop you out, but best case scenario is to get out of the trade itself. Okay, so I've come to the end of the session today. I hope you guys have learned as much as I did. I will paste this. Wait, give me 1 second. Okay, this will be the page where you can watch all our sessions. Okay, from previous past few weeks. If you want to tune into today's session, you just give it a couple of days, maybe by tomorrow or the day after, it should be uploaded. This is a recorded session itself. So this is the link that I've pasted there for you to rewatch the series, today's series, right? Okay, thank you guys for tuning in. I will see you guys next week.